A very good morning to our listeners. Hope you all had a great weekend. A quick recap then of the major events as we head in toward the North American Open. Starting off with China firstly, we did see a slew of economic data this weekend. It was a little softer in terms of industrial production, retail sales, CPI and PPI were also a little softer than expected. However, the new yuan loans was quite a bit higher, around just shy of 800 billion, estimates worth around 700. And in terms of the trade balance, that was higher than expected. So in terms of that, they're not quite as bad as the market may have feared, given the surprise move by the PBOC last week to cut interest rates for the first time since late of 2008. So all of the Asian bourses finishing in positive territory. But one of the biggest factors here has been the news coming out of Europe this weekend, where Spain have now officially requested formal aid. In terms of the final details, still very sketchy somewhat in terms of what exactly they will be and what interest rate they'll pay for this assistance. The Spanish government suggesting that they're still awaiting these independent audits on their banking system before any further details can really come to market. But in terms of the overall assistance then, the aid for their banking system, it could be up to 100 billion euros according to the comments from the EU officials over the weekend. Again, whether or not they will use that full amount is still yet to be seen. In terms of the overall market reaction, sharply higher equities overnight in Asia, as well as commodity prices, with both Brent and WTI crude also seen sharply higher, aiding as well as some of those commodity-linked currencies. In terms of as the sessions progress though, we've seen a slight reversal. Again, as mentioned, we're still lacking some of the finer details about the implementation side of this Spanish deal. And also as well, economists such as those at Citi still questioning now about not forgetting about the Italian banking situation, given now it seems that the plans are being put forth for Spain. As such though, the 10-year government bond yield spreads still remain tighter on the day, but do keep a close eye there. They have widened slightly from the opening levels as we head toward the North American session, and given the fact that there's a lack of US data today, could well keep things very much Eurocentric. That pretty much concludes the opening wrap for me for the moment, so I wish you all a great trading day and all the best.